I'm Zachary Bauk, Chief Investment Officer of Denver Wealth Management, and today is Friday, April 3rd. And what I'd like to talk to you about today is basically what we're seeing in the economy, what the government's doing, and what we think some of the potential outcomes might be. And when it's really interesting to listen to major figures, from presidents to CEOs to senators to governments and congressmen. This is completely uncharted territory. No one has any idea how this might end, but we think there's a couple of possible outcomes that we should look at. The number one thing we know for sure is, unless we get some major surprise, like an antiviral comes out that can essentially stop the disease, or the hot weather just essentially causes the flu to go to the southern hemisphere, unless something really unexpected happens, we know we're in for an extended period of uncertainty. So the first thing that's very likely to happen is, in a lot of places that got hit the worst in America, we're starting to see the top of the curve. We're not all the way there yet, but we're going to start to see the curve flatten out and eventually come down. But what happens in that scenario? If we all go back to work and we all go back to baseball games, if it's not a seasonal virus, but essentially a permanent virus, we're going to see the curve rise again. And there's a high probability that we all have to go back into exile, or quarantine, as some people have been calling it. I've personally been calling it exile. So if that's the scenario, we are in for an extended period of economic turmoil. Now, the government has done more than it did in 2008 to shore up financial markets, to ensure that people who are unemployed have their income. Even 1099 workers, they've shored up payroll for small businesses. They shored up rental payments for small businesses. The government has basically fired every single thing they can think of to shore up the economy. And that's great if this is a 3 to 6 month initiative, if in 3 to 6 months we're coming out of it. But if this continues to be a multi-year problem, we're in for a very difficult time period. And that's why you see all the uncertainty in the market. As of today, the stock market's down about 30% from where we started in February 15th. And in my long webinar about the coronavirus, we talked about 3 types of recessions. There's event-driven, cyclical, and structural. We're already in an event-driven bear market. That means something caused the bear market. If that's what we're in, those are usually short, and the drawdown from top to bottom is usually 30 to 40%. So if this is simply a coronavirus bear market and it doesn't expand, we've probably seen the worst of it. If this bear market turns into a cyclical bear market, that's where you see major disruptions in business and not just business, but supply chains. If you see a major supply chain breakage, you see major disruptions in business, this would become what's called a cyclical bear market. And from there, we usually see declines of anywhere from 40 to 50%. We haven't gotten there yet, and that's what the government's doing, is they're trying to stop the cyclical nature of this recession from expanding. The situation that the government is trying to avoid is a structural bear market. Now, a structural bear market is where the financial companies basically also start to fail. There's almost like a financial contagion that causes banks to fail. And that's what we saw in 2008 with the failure of Lehman Brothers and the bailout of AIG and a lot of the major banks. Now, the Fed has already done a lot of things to prevent that. They've pretty much done everything they possibly can to prevent a structural bear market. And I believe that even if we do see the coronavirus event-driven bear market turn into a cyclical bear market, we won't get a structural bear market out of it. So it would be surprising to see this go down even further than the 2008 financial crisis, but certainly we have no idea or no way to predict whether or not that will come to pass. So the best advice that we have for everyone right now is you really want to own 3 types of investments. You want to own strong blue chip investments that will do very well if we do have a long extended recession. Even if this does last for a year or two, there are companies that are the stalwart companies that are going to do well. The second thing you want to own is small tech companies that are really going to flourish whether we have a long bear market or not. So, our kids, Denver Public Schools is now canceled through the end of the year. They're all going online. I believe they're using a Google platform. So there are companies that are going to be very rapid growers because of the coronavirus recession. And the third thing we think it makes sense to own is, it's not a bad idea to have some cash ready to invest in case we do go down to that 40 to 50% down range. You don't have to have every single penny invested all the time. And this is a great time to have some money on the sidelines and look for opportunities. Now, today's April 3rd. By Monday, if the market drops 5%, we might change our opinion. So this is a very short-term opinion on how this is all going to look. But everything we know now, we know there's a lot of uncertainty. So we want to make sure portfolios are positioned for a couple of different outcomes.